Well, welcome back, everyone. It was an incredible day in markets today. It just continues with excitement and, of course, a lot of volatility, which has to be managed very carefully. Now, over at the Active Trader Room and over on Wealth Charts, I've been letting members know that this market has got a better than fair chance to play out a particular flight path that we've identified before the week started. In fact, last Friday. We've got a magenta flight path and a blue flight path here. And the blue flight path is the one that we suggested has a higher probability of playing out. Now, there's a lot of colorful lines on the screen here. You've got your weekly pivot lines, you've got a Fibonacci retracement, and you've, of course, got the trend channel that broke, and that was the big trend starting in late October, early November of 2023. Now, is the market post the Fed in a spot where downside risk is greater, or are we going to play out that flight path? Or did today, that pump and dump that we've seen, merely establish a base that is higher than the recent lows and is a launching pad for us to continue up? Well, what we were speaking with members about earlier today was the signaling using the Champion Trend Pack Toolkit and what it effectively offers for the next move. What you're looking at on screen right now are the Champion Trend Pack indications. You've got the Champion Cross, which is a opaque zone, and we are in that opaque red zone, and it comes with a dot at the bottom of the screen implying a sell signal from Champion Cross. And Champion Trend, we've got a sell zone. Now, those two typically kick off a sequence of trade signals that has a high degree of efficacy, and we can understand what's likely to come next. Now, if you take a look at the Champion Trend and Champion Cross sell signals, they establish effectively stage one of three stages wherein the market can give us, some fairly reliable outcomes. Now, at this stage, what I'm going to say is you've got price action on the S&P 500. This is using the ES. And a moment ago, we were looking at the SPY. And we can go back and forth there. So there's the SPY. And you can see that it had a big pump up to about 508. And it imploded right back down to close closer to 501 or 500. Now, if we do this using the Champion Trend Pack Toolkit on the ES, this can be done on the SPY just the same, using daily candles, we note that we are in stage one of a three-stage sequence of signals. What's stage two and stage three? Well, stage two is typically a wealth signal, and it would be a sell-side signal above the price action. And stage three usually is the breakout forecasters. You can see the breakout forecasters on the bullish side there in green. Now, we don't have the wealth signal yet. We don't have breakout forecasters, but what we do have are some of the other items on the effective chart that says, hey, Wealth Chart member exclusive tools like the IRB trackers or Rob's IRBs or momentum shifts, and of course structures like the channel and the speed lines. Let me walk you through that. We are in stage one of the sell signal sequence. As we move through and into the end of the day today, we do have a toggling on and off as the bar comes to a close. IRB tracker negative, and there it is toggling back on. It'll be firm when the bar is closed, assuming price remains in this area or lower. We do have price action coming up and pushing up above the Champion Cross sell zone. That's the opaque zone there, and then pushing right back down below. We also have another artifact of a sell signal state that is getting stronger, and very simply, you've got the fast speed line, which is that blue speed line coming down and closing crossed under the magenta speed line. A cross like that, akin to a cross here or a cross here, typically has follow through over the next several days with downside action. Now, of course, we have seen the Fed throw some candy at the market with their quantitative tightening program, coming off a little sooner and in a little bit more size. But that doesn't solve the problem of the consumer, and the consumer at the end of the day is getting it from all ends. Transport costs, housing costs, food costs, healthcare costs are eating into disposable income as inflation remains sticky. So a crisis is what the Fed really needs at the end of the day to start printing money in one way, shape, or form. Bottom line is, we've got a market that has acknowledged it's unlikely that we are going to see growth come back without more accommodative policy sooner. And the market voted into the end of the day that what Powell did wasn't enough. So you've got effectively a big gravestone doji. You've got a sell signal state from the Champion Trend Back Toolkit. You've got an IRB tracker that's negative. And the next most important insight would be price action coming down below this positive momentum shift where the level is effectively 50.21 on the ES. And that's roughly 30 points lower than where we are now. Yeah, that means get the SPY down into the 497 and 50 penny area or lower. That opens the door for a next move down. Now, that doesn't have to happen right away, but we're still in a state where we're operating under falling resistance, and we have not yet found our way through it to actually come out and resume an uptrend or have a stable sideways range. We're still in that sell signal state, and that would be my insight to you. I also was on the phone with Rob a little earlier. Big shout out from him and the entire team. The insights that I've just provided to you, he gave the same sort of things and with more detail on the NASDAQ to me as well. And the insights from his side are very straightforward. We've got a lot of work to do before we can actually see long side swing trading coming back, or longs in general coming back into the market. And we'd have to get a big break above the top of the channel here on the NASDAQ and really clear the sell signal state overall. The market is still at risk. Volatility is still in a place where it can rise. Take great care out there. Now, my estimations based on what we were looking for from the very beginning of the week to where we are now have largely come to fruition. That blue flight path is what I was looking for markets to trace. And if a market comes down after breaking a big uptrend and only retraces about 25% of the overall range of that big move, it's uncommon. It's more common that we see a retracement of about 38.2 or half of the overall range gets retraced before the market resets. And that can become actually a positive thing in the long run. Folks, I hope that this has added some insight to your overall picture on markets. I'm looking for that stage 2 signal and or that break below. At the same time, potentially, that break below that 50.21-ish area on the ES to signal more downside risk. If we do get back up above the top of the channel, evaluation will be required to determine if this market can find its footing again. Stay safe out there, folks. The Big Apple after the bell on Thursday. Watch out for that. And jobs data, of course, coming out on Friday morning. Thank you for your time and thank you for watching. Have a great rest of your day.